Hello, and welcome to another update video on ADA. On the ADA chart, we continue to track this ongoing correction that already started here on the 12th of May. Since then, the market has only rallied in 3 waves, so all the rallies have been corrective in nature. And it looks, to be honest, it looks based on the microstructure a little bit as if the correction should still get a few more downside squiggles, as shown here in orange. We don't need to necessarily fill in the entire nanostructure here. As you might remember from previous updates, as long as we are holding above the 51 cent level, which is the previous swing low from April, the idea of a wave 4 triangle remains valid, remains plausible. That is the scenario in which we could indeed be as I said, in a wave 4 correction. Need to hold above that April low, and the wave 4 is seen as a triangle. So that's really the key level that must hold at 51 cents. We don't necessarily, as I said, need to fill in all of these, let's say, waves to the downside. The entire nanostructure to the downside does not need to complete. I've got 2 pathways here. In white, I would still like to see maybe here a larger wave D of the triangle. I have to say though, the lower we go, the more probable it gets that we're already in the E wave. So you could say these are the 2 scenarios. Either we get another bounce higher to form wave C of Y of D, basically just the larger correction, or if the D wave indeed already finished, because we haven't seen any meaningful reaction to the zone here, if the D wave already finished, then we could already be in the E wave. And again, that's why I've been saying all along, we need to hold above the 51 cent level. So while the microstructure is one thing, and it would still be ideal to form a wider D wave to the upside, cannot rule out that we're already in the E wave. And why do I say that? I'm not saying that because we've broken any support. We haven't. It's simply working still on this correction. But the nanostructure, based on how it's organized, kind of allows for the interpretation that we are here in the orange microstructure that can send us a little lower. So you see here wave 1, wave 2, could now be in a 3rd, then a 4 and a 5th. So this is a structure that, I'm tracking, in which, as I said, a 3rd wave down could still be unfolding, and it's likely not finished. It should be longer than 1. Also, based on the nanostructure, we might get another wave down, another lower high, another lower low, and the nearest resistance area is between 70.3 cents and 72.4 cents. So between the 23.6 retracement and the 50% retracement. So standard resistance, highlighted there in red. Any break above could indicate we're already starting the next rally to the upside, but again, at the moment, the bounce is corrective. We don't even have a bounce. Market is currently holding above the orange micro support region there, and we are only witnessing something that we could call maybe a small bear flag there. So I don't think there is any evidence at this point the correction is over. I would need to see minimally a break above 72.4 cents. That's the update on ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.